Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Tuesday, the 11th of February. There is a risk rally that we're seeing coming through markets today. It certainly seems as though that the reports over the weekend that there was a decline actually in the number of new cases recorded in China of the coronavirus, and that's led people to believe that there is a degree of topping out potentially of this virus starting to take hold. So that has really pulled markets higher in terms of how risk appetite has gone. We've seen equity markets stronger. Look at this move on the S&P 500, initially lower on the day, then closed higher at all-time highs, and a really strong turnaround that we saw there on the S&P 500. So really has helped to pull European markets higher. The futures are higher again in the States. We've got 0.2% positive. We've seen a turnaround in risk appetite in terms of how the safe haven assets are playing. You've got yields higher. You've got the Japanese yen, which is just underperforming slightly. We've also seen the Australian dollar, which is on the riskier end of the major scale. Australian dollar outperforming, New Zealand dollar outperforming, with the Canadian dollar outperforming. So these commodity currencies, which are aligned to that risk reversal, helping to be pulled higher by that improvement in risk appetite. So we've seen the oil price over 1% higher today. Let me show you how that has picked up again off the lows on the WTI 49.30 yesterday, so that's been dragged higher this morning. So that is obviously playing into that risk rally that we've got today. So pretty much a risk on theme across markets today. Now, in terms of how data points are looking, we've got pretty much a UK focus actually early morning today. We've got the UK GDP numbers for Q4. They're expected to be, Q4 is expected to be flat quarter on quarter, but the annualized or year-on-year data would be 0.8% positive for the year. And then we're also looking out for industrial production, expected to improve by 0.3% on the month in December, but still negative for the year-on-year, down 0.8%. And also the trade balance actually deteriorating, expected to deteriorate back to £10 billion negative in the deficit. So this afternoon, a little bit of US data. Is the JOLTS jobs openings expected to pick up to 7.00 million. Now, the other main focus today is, aside from the data, is the first day of Jerome Powell, the Fed chair Jerome Powell, and his congressional testimonies. Day one of that. So how he sets his stall out will be very interesting. Sort of quite neutral in recent Fed meetings, but also obviously the coronavirus will be interesting. How the Fed sort of puts out across how it's going to impact on the consumer will be interesting in the States. You actually also have ECB President Christine Lagarde speaking today, and also Bank of England's outgoing Governor Mark Carney also makes a speech and is testifying to the House of Lords Financial Services Committee there. So it'll be interesting to see how all that plays out. We've also got a couple of Fed speakers, lots going on today, a couple of Fed speakers, Randall Quarles and Neil Kashkari. Quarles is a centrist, Kashkari is the big dove on the committee. Right, so my chart today is the Euro-Yen. Now, what we have seen in Euro-Yen, Euro has been under pressure, undoubtedly, in the past week, really significantly lower against the dollar, breaking through key support levels. And it's interesting to see that the yen has also been a little bit under pressure today. So that sort of move that we've seen in euro has dragged euro-yen back to this key support around 119.75. The market has already broken this lower high. Sorry, broken the higher low of January, which was 120.15. In breaking that, it actually, if I zoom out here, it actually not only broke the uptrend, but that uptrend, old uptrend, became a basis of resistance, turning lower, and it looks as though this is a market topping out, but the market has picked up slightly from yesterday's close. Yesterday's close was pretty much bang on to the pip, 119.75. Now 119.25 is the key support to watch out for. That's the November low, and that would really be turnaround territory and topping out and really pulling lower. Already it looks as though this is a market topping out and starting to form lower highs and lower lows. And you look at the fact that the momentum indicators are negatively configured, RSI failing around the 50 mark, MACD lines turning lower underneath neutral as the stochastics also bear cross as well. So it's sort of positioning for, I think a close underneath 119.75 would really start to sort of put pressure on the downside, turning lower back towards 119.25, and then you could arguably sort of target, get an implied target of this being a double top pattern, which gives you around about 250 pips or so of corrective move. And I think that what we'd be looking out for is further weakness in due course, obviously back towards the 118s area. So if this market does continue to close and falter underneath 119.75, it really would open, I think, the downside. Now look at the hourly chart and you can see how we've had an intraday rebound today, but the resistance around 120 big figure, which was early low from yesterday, old support becomes new resistance. And you can see that there's a large amount of overhead supply actually between sort of this area 119.80 up towards sort of 120.40 area, all this overhead supply here. And I think that this is certainly rallying into a whole load of resistance, which could house a bunch of new sellers actually. And you can see that the momentum indicators on the hourly as well, MACD underneath neutral still, RSI under 60, failing around the 55 area. So it looks like it's a rally that is going to be coming under selling pressure once more. So it'll be interesting to see how this one pans out. But it certainly looks as though the selling pressure is growing on Euro Yen. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.